Hey, welcome back. It's Jason Walter here, and here's your latest housing market update. According to a new survey, home builders are slashing their home prices and slowing construction as home buyers are pulling back. Also, according to a home builder who's based in Nashville, Tennessee, they stated that this is scary times, hoard cash, and hang on for the ride. This is according to a new survey that I'm going to be sharing with you guys today. So hope you guys get a lot of value out of today's video. And with that said, let's go ahead and dive right into the video here, because this is pretty remarkable. Home builders across the country are basically raising the red flag because they're seeing a huge pullback in home buying demand. So here's the latest survey here. And this is according to the director of research at John Burns Real Estate Consulting. They report everything regarding the housing market, economics, and finance, for example. So here's what Rick had to say regarding the latest results from home builder sentiment and the survey for June. So here's the top themes. Number one, a lot more new home buyers are canceling. In other words, they're canceling their contracts right now. We're also seeing more price cuts, and this are becoming fairly common right now. There's also a drop in demand that's finally cooling construction cost pressures. And also builder layoffs are also happening. So here's some market commentary regarding home builders across the nation here, because this is pretty fascinating here. A builder who's based in Atlanta, Georgia said, "Someone turned out the lights on our sales in June." In Austin, Texas, sales have fallen off a cliff. We're selling 1/3 of what we sold in March and April. And trades are more willing to negotiate pricing since market has adjusted significantly in the past 60 days. So in other words, the home builders right now, this is not just in Austin, Texas, and I'll sharing this with you guys in a little bit. But right now they're seeing that a huge pullback in demand, and therefore home builders have to readjust by offering more concessions and also reducing prices in some cases as well. And so because home builders have to do this, they're asking their trades, in other words, all the people who are involved on building houses, builders are negotiating prices right now from their tradesmen in order to help ease the pain of these concessions that builders are doing right now. And another builder here says that sales have fallen 75% in the last 2 months. Boise, Idaho. Sales have slowed tremendously. Builders are dropping prices and halting new starts. Seeing prices drop on labor due to slowing of home starts. And Charlotte, North Carolina, a builder said this recession is looking like and feeling like a big, long 5-year depression. Colorado Springs, Colorado. Amazing how fast a market can change with such a rapid increase in rates. So many people were taken out of this market. Most builders will go to suppliers and trades and ask for rollbacks on costs. And again, another builder here who's saying they basically are trying to reduce their costs right now because of a big decrease in home buying demand. Therefore, they're going to their suppliers and also their tradesmen who build these houses in order to ask for some decreases in prices. Dallas, Texas. Haven't raised prices in 3 months. Fort Myers. Investor sales have stalled. Grand Rapids, Michigan. I believe we're on the edge of cost reductions, making every effort to refuse further cost increases and pushing for decreases in all areas that have seen a significant 2-year run-up. Greenville. Traffic has slowed from red hot. Feels different for sure, but it's more like a normal market. A home builder based in Harrisburg, Pennsylvania stated the following: sales decreased to 50% of what they were 3 months ago. That's a huge decrease in 3 months. Traffic is down, and we're only moving or selling spec homes after dropping prices though. No one is buying to be built homes at this time. In other words, home builders placing deposits down on a dirt lot in which the home is not going to be built or constructed for 6 to 12 months. Houston, Texas. With the exception of concrete, construction costs appear to be stabilizing. Lumber is trailing downward, which is good because we're going to need that reprieve for buying down mortgage rates to get buyers qualified. In other words, they're trying to buy down mortgage rates for home buyers right now because they're seeing a big pushback in demand because of rising mortgage rates. Melbourne, our investor sales have stalled. Nashville, Tennessee. Scary times, hoard cash, and hang on for the ride. National builders are cutting staff and offer buyers incentives. Move-up buyers, in other words, people buying houses that are basically more expensive or larger than the current houses, those are move-up buyers. Move-up buyers are now practically non-existent due to rising rates in comparison to their current existing rate. And check this out, because in Phoenix, Arizona, they're also seeing some challenges as well, which is pretty remarkable because Phoenix, Arizona is one of the cities that have the highest price appreciations over the past couple of years. So according to one builder there, some builders are already cutting staff. Cancellations are extremely high. Dismal traffic and sales climate. And in Riverside, California, which is basically in Southern California, we've reached the top in pricing. San Diego, fewer people in the market than before. And also in St. Louis, expecting to see opportunities for lower costs coming in the near future as demand cools and manufacturer and trades see backlogs shrinking. The end. And check this out regarding move-up buyers or lack thereof. So Jeff Weininger actually replied to this tweet. And Jeff Weininger, by the way, is the head of equities at WisdomTree. He's also a regular contributor to Bloomberg. Plus, he's a ninja. He stated the following, or he replied the following. So regarding move-up buyers being non-existent, check out this math. Moving up in the world, your career is going well, you feel like it's time to buy a better house. Not going to happen, not at 5.5%, that is. So take a look at this. It's assuming you're going to sell your current house, which is $300,000, and move to buy a $500,000 house. They're assuming you have $50,000 in equity. Therefore, your current mortgage balance is $250,000, assuming a 3% mortgage rate, which is the approximate mortgage rate over the past couple of years. In fact, that was the average last year in 2021 was 3%. So your current monthly payment would be just over $1,000. So if you were to sell that house, your current house, and buy a better house, now worth $500,000, and transferring your equity in your current home to the new home, therefore your mortgage balance would be $450,000, and your mortgage payment or your mortgage rate would be approximately 5.5%. Mortgage rates right now are in the range of 5.5% to 5.7%. So anyways, if you were to have your current mortgage rate of 5.5%, an increase of 250 basis points from your current rate, your new monthly housing payment would be $2,555 per month. In other words, approximately $1,500 more per month, or more than double your current housing payment. And that's one reason why we're not seeing a lot of people selling their current houses and buying a better house. In other words, why would you sell your $300,000 house right now and buy a $500,000 house, given the fact that mortgage rates have increased from about 3% now up to 5.5%, and therefore your housing payment would almost triple, even though your home price is only up $200,000. And Jeff actually had another good tweet that I want to share with you guys as well. So assuming your house is worth $500,000 right now, and you have 50% equity in your house, in other words, you have $250,000 in equity, your house that you're going to be selling is $500,000, your mortgage balance is $250,000, and your current mortgage rate is 3%. So your current payment right now is $1,054 per month. If you're going to sell that house and buy a $600,000 house, in other words, only $100,000 more than your house you're selling, then your new mortgage balance is going to be $350,000 and not $250,000. But based on current rates, again, around 5.75%, your new housing payment is going to be double what your current payment is right now. So $2,043 per month versus just over $1,000 per month for your $500,000 home. What's also very remarkable regarding this stat here, or this table here, which I really love, is that if you basically were going to sell your current house for $500,000, if you want to buy basically the same priced home, if you're moving to a different area or moving to the same area, but if you're going to be moving to basically buying the same priced home you have right now, because mortgage rates have increased 275 basis points in this example, your housing payment is going up 50%, because your new payment would be just under $1,500 per month versus only $1,000 at your current rate. So in this example, if you sell your current house at $500,000 and buy a $600,000 home, your payment basically doubles. However, if you're going to be selling your current house at $500,000, but you want to buy a $800,000 home, then your payment triples to $3,210 per month. In stark contrast though, take a look at this. If you want to sell your current house and buy a $1 million home, your mortgage payment would go up 4 times your current payment. Therefore, because of rising mortgage rates this year, going up from approximately 3.3% now up to approximately 5.75%, we're not seeing a lot of people right now who are selling their current houses and moving up. And we actually have data to support this as well, because here's the latest trends we have from Redfin. So the number of new listings right now are down 7% compared to 1 year ago. So we basically have 7% less new listings right now compared to the same week 1 year ago, which helps support the notion that we're not seeing a huge increase of new listings because a lot of people are not selling their houses right now because of rising mortgage rates, because they don't want to sell their current house right now at 3% in order to buy a new house at 5.75%. So in my personal opinion, we're not seeing a huge increase of new listings because of this, but we are seeing an increase of housing supply. So right now, the gap between 2021 right here in orange and 2022 this year has been narrowing. And the reasoning for this is not from a huge increase of new listings, as you guys just saw. It's really from a strong pullback in home buying demand. And speaking of a decrease in home buying demand, according to the latest results from the Mortgage Bankers Association, which was just released today at the time of this video, mortgage applications decreased 1.7% from 1 week earlier. This includes purchases and refis, by the way. So the refi index, which is a measure of people submitting loan applications for refis, actually increased 2% from the previous week, but it's down 80% from the same week 1 year ago. Also, the seasonally adjusted purchase index decreased 4% from 1 week ago. Again, this is an index based on home buyers submitting loan applications to buy houses, and this is seasonally adjusted due to the Independence Day holiday. Meanwhile, the unadjusted purchase index decreased 14% compared to the previous week and is still down 18% lower than the same week 1 year ago. And according to Joel Kahn of the MBA, he stated the following: mortgage rates were mostly unchanged, but applications declined for the second consecutive week. After reaching a record $460,000 in March of 2022, the average purchase loan size, again, these are based on applications, was $415,000 last week. And by the way, this is a fairly big decrease in a very short period of time, going back to March 2022. And this decrease actually was pulled down by potential moderation of home price growth and weaker purchase activity at the upper end of this market. So what he's saying here is that we're seeing a pullback in home price appreciation as of it important to you guys, but also a decrease at the upper end of the market. So in other words, people who are buying more expensive houses are not buying those houses at the rates we once saw 1 year ago, for example. And by the way, stick to the end of this video because I'm going to be sharing a brief summary regarding the latest trends I'm sharing in today's video, and also some advice for you guys as well. So one thing I definitely have to mention is the inflation readings right now. Also in the news was June's inflation report. So inflation rose 9.1% in June. This was just released today at the time of this video, which is the 13th of June. It says even more than expected though, as consumer pressures intensify. Inflation rose to 9.1% in June. The expectation was for an 8.8% increase. So inflation is running at higher levels than expected. Also, the Fed's closely watched core CPI, which excludes food and energy, rose 5.9% compared with a 5.7% estimate. Costs surged for gasoline, groceries, rent, and dental care. And here's the potential impacts regarding our housing market regarding this red hot inflation report. For the Fed's July 26th and 27th meeting, traders upped their bets on the pace of interest rate increases ahead. And also the recession threat is rising as well. So regarding their bets regarding rate increases, here's what the street is expecting as of today. And by the way, we're 2 weeks away from the Fed's meeting here. So for their July 27th meeting here, they're basically calling for a 68.4% probability that the Fed is going to be increasing the federal funds rate by 100 basis points. And they're only calling for a 31% probability that they're going to be increasing rates by 75 basis points. And this is a big turnaround because yesterday's probability, take a look at this. So yesterday's probability only called for a 10% chance that the Fed is going to be increasing rates by 100 basis points. And yesterday they stated that it was a 90% probability they're going to be raising rates by 75 basis points. So a very big turnaround. The strong consensus right now is calling for a 100 basis point rate increase. And meanwhile, according to the Mortgage News Daily as of today, average 30-year fixed rate mortgages for people with exceptional credit, of course, is at 5.72%. That's only up slightly compared to yesterday, but up 2.6 percentage points from 1 year ago when rates averaged 3.11%. And meanwhile, the yield on the 10-year US Treasury note is at 2.9%, which of course is tied pretty directly to mortgage rates. So when the yield on the 10-year increases, so can mortgage rates. So that was a lot to cover in today's video. So I also want to give you guys a summary regarding today's video. So we have a broad-based decline in new home foot traffic and sales across the nation as of June, as you guys saw. Also, some home builders are reducing their asking prices and or offering incentives to home buyers in order to attract them to buy houses right now. I also expect to see housing starts for single-family houses to go down again in June. The U.S. Census Bureau's report on this is going to be released on July 19th, and of course, I'll make a video once that report is released to you guys. Additionally, June's new home sales will be released by the Census Bureau on the 26th of July as well. Of course, I'll make a separate video regarding that once we have that. But my expectations regarding this is that we are going to be seeing a further declines in new home sales as of June. But because of all the concessions that home builders are giving home buyers right now, that's going to help dampen the blow in demand and also dampen the blow in new home sales for June. However, though, I do expect new home sales in June to decline. If you are interested in buying a new house right now, then my advice to you guys is that it's very risky to put a deposit down on a dirt lot right now. This is because we have an environment right now that's very volatile. We have an environment right now that mortgage rates have been increasing. So I think it's very risky to place a deposit down on a dirt lot in which the house is not going to be built for 6 to 12 months from now. Also, it appears that builders have only just begun price reductions and incentives right now. So keywords here, if home buyer demand continues to decrease, home builders are going to have to offer more incentives and more price reductions in order to get their houses sold. We also have a potential recession that's going to be occurring later this year or maybe next year. So my advice for you guys is to save your money and pay down high interest debt you may have, such as credit cards or a home equity line of credit, for example. Also, in regards to this red hot CPI report regarding inflation at 9.1% versus 8.8% that was expected, the street is expecting the Fed to increase the federal funds rate by 100 basis points, whereas they were previously forecasted to increase the rates by 75 basis points. Therefore, if the Fed's going to pivot from a 75 basis point rate hike all the way up to a 100 basis point rate hike, this is going to cause mortgage rates to spike once again, potentially, because mortgage rates have spiked this year when the Fed pivoted to get more aggressive on rate hikes. But what do you guys think? Comment below. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.